record. Cool. Okay, right, ladies and gents, welcome to the very latest Air Group Meet the Lender webinar, live chat. Thank you for taking time out. This will be recorded, so as they say on Channel 4's Big Brother, please do not swear. Les, that's especially relevant to you, as you your Black Russians. Really an opportunity for Les to update us on what Canada Life are doing. What are the sort of USPs to try and help you navigate as efficiently as possible for doing business with them. They've updated their product range, which I'm not going to steal Les's thunder, so he'll update you on where they are there. So other than that, Les, over to you, my friend.
Lovely. Okay. All right, guys. Yeah, so you'll be aware that we've slowly been able to get our products to market. One set of products was really quick. Another one, externally funded, took us a little while to get them over the line, but they were there. The thing for all lenders right now that you have to remember is that the tail is wagging the dog. So whether that tail be the surveyors, whether it be the legal profession, whether it be the council, whether it be funders, there's somebody somewhere saying, if we're going to proceed in this market space, this is how we're prepared to do it, and this is the only way we're prepared to do it. So there's a certain element of you see Canada Life, but I see Canada Life Home Finance and the management team and everything we're trying to achieve. But I also see Eversheds, eServe, I see our 4 funders, I see all of these other elements within our business that we need to manage and get comfortable with lending in what is going to be a highly volatile market and situation for the foreseeable future, on the basis that if you were to read the 50-page report that was sent out by Sage to the government, their consultation paper, you know, there is not going to be a cure for this. It's just a question of how we manage it, and how we manage the circumstances going forward. So, and of course that also relates to our personal lives, and it relates to our business life. I've got a bit of a presentation just to bring you up to scratch with where we are as a business. So we've got a few slides to go through, particularly because we were able to get lifestyle range over the line first, and then of course everybody's screaming for Capital Select and Buy to Let. We've now got those over the line as well. So really the thing that we need to cover off as lenders is to support you guys with as much of this change as possible. It's not simple, it's not straightforward, and whilst as a lender we've always tried to keep parity between all of our product ranges as much as possible, we do have some differences now in that some of our products have retentions and some don't. So I should be able to share my screen, and I should be able to get to this presentation. Nobody even knew what Zoom was, did they, 2 months ago? And now, if it's anything other than Zoom, I'm lost. So,
Les, don't you wish you bought shares in Zoom 3 months ago?
Yeah, to be honest, and that's an incredible thing. Human beings do innovate, don't we? And for example, one local business that didn't exist, whilst some businesses are struggling, one local business that didn't exist, they live in Poole in Dorset, and the local hotels and restaurants were buying the fish from the fishermen. The fishermen were worried about their industry and the fact that they had nobody to sell to. A chap decided to set up a page on Facebook, got it spreaded around, and instead of selling to the hotels and restaurants, they're now selling directly to him, and then he delivers to your home. So, you know, whether that be sea bass or you know, whatever it is, mackerel, whatever they brought in that day. So innovation is always something that us humans seem to be pretty good at. So in terms of Canada Life Home Finance, where are we up to? Well, remote valuations, this is where we are now up to. We have got remote valuations over the line on all of the product ranges that continue to be in the market space. So the 2 that we've lost is Voluntary Select and also our Prestige products. Voluntary Select, that was always the product that I said was actually very good value. It was market leading in every respect, but of course that came at a cost. And Prestige was our product that dealt specifically with high net worth individuals, particularly focusing on property, high property values, and loans between £1 and £2 million. So we've lost those 2, but everything else is good to go. Lifestyle options, like I say, we got that one over the line first. This is what the product I always describe as vanilla, because you can't make repayments to it and stuff, but it does serve a great purpose. Sorry. So on Tuesday, 14th of April, we introduced remote valuations on lifestyle options. So it's been around for a while now. And in actual fact, we were reasonably quick at getting this particular product range over the line. So with regards to remote valuations, if you submit a KFI and an application based on the LTVs and everything else that you find on your sourcing system, that will produce a KFI. There's no retentions on this at all. We need to get a satisfactory valuation done on the property within 6 months. That's an arbitrary figure, 6 months. The reality is it could have said 4, 6, or 8, or 12. But the reality is we would hope to get most valuations completed within 6 months, subject to whatever happens in not just the UK but the world going forward. Temporary modifications to our lending criteria are in place. And our valuers may need to find out significant information about the property in order to allow it to pass a desktop valuation. Something I'll cover off in a minute. Very, very, very competitively priced. 2.81 MER on Lifestyle Light, 2.85 on MER on Lifestyle Gold. Have to admit, I think the sales team and myself were incredibly surprised by the competitiveness and the pricing point on this particular set of products. I don't think we imagined that we would see anything with a 2 in front of it, particularly when you cost in fixed DRCs, and fixed DRCs do come at a cost. So very, very competitively priced. And indeed, we are looking at that pricing on that product range yet again, news to follow, and hopefully that will be positive. In terms of the product itself, it's available as it always was from the age of 55, free valuations with no cap. So although we're not able to desktop value a property valued at say £5 million, the reality is you can apply, you can quote, and you can put that into our pipeline, waiting for a valuer to go out as soon as possible. There's an optional cash reserve facility. One of the reasons why people use this product is the cash reserve facility is uncapped, which means that you can have a £20,000 initial loan and potentially a £400,000 reserve facility. Because we know you're going to be servicing that for some time to come, we pay you 1% on the reserve facility up front, so that you're effectively paid for in advance for the work that you might have to carry out for those clients in years to come. Fixed interest rates, of course, no affordability checks, option to take further advances, and the inheritance guarantee. Now, the inheritance guarantee, how that works, if they borrow half of what they potentially could borrow on a particular product, then, for example, 50% of the property on sale on death or going into long-term care would be guaranteed to the family. A lot of advisors would say that if you've only taken half of what you can potentially take on a product, then it's unlikely to be called into action. But for some customers, for cautious customers, that comfort blanket, that sort of cotton wool around them can be something that they find appealing. Equity Release Council product standards, as you would expect on a lifetime mortgage. The temporary modifications to lending criteria is the frustrating part for me and for my entire sales team. We've prided ourselves, as you will know, on the fact that you could phone us up and go, look, I know this isn't quite in lending criteria, but can we stretch? Can we have a word with Andrew Goodenough? Can we speak to underwriting? Can we squeeze this one through? And that's something that we've loved doing. It really is a salesman's dream, I suppose, to be able to do deals. And this is a place that we have always been able to do deals. Unfortunately, as I said at the start of this, the tail is wagging the dog, and eServe are saying, look, if you want desktop valuations, we will do them for you, but this is how we'll do it. And this is the parameters that we feel are necessary in order for us to do this safely, both for you and also for us. All right. So capping our maximum property values at 1 million in Greater London, 750,000 elsewhere. List of postcodes is available on our website because some postcodes, for example, in Surrey or somewhere like that, is it inside the M25, outside the M25? Does that qualify as London or not? Excuse me. So we're only accepting properties that were built after 1850. We're only accepting properties up to 2.5 acres. We're only accepting properties with a lease term above 100 years. We're no longer accepting listed properties, unfortunately, and no longer accepting new builds. So a new build is something that is built within the last 2 years, but I believe we are now accepting some purchase cases, but purchasing of an older property, not a new one. No longer accepting non-standard construction properties, no longer accepting properties which are adjacent to, surrounded by non-residential, so in other words, close to commercial. So the really annoying thing about this is historically, a advisor would have said, listen, I've got a pub that's just down the road, or maybe I've got some shops that are just down the road, or I've got a property with 250 acres, not 2.5. I've got a property here that is old and grade 2 listed. Those were all the kind of things that we prided ourselves on being able to kind of take a view on, take a common sense approach to. But right now, this is black and white. So what I'm asking advisors is, if there's a property with 3 acres or 3.5 acres, if the property was built in 1845, if a lease term is only 98 years, save yourself the time and effort of phoning us, because unfortunately, for the time being, this is the parameters, and for now, it's black and white. There is no sort of grey that we've always been used to here within a business. It is yes or no, and this is the very fixed criteria. So then last week, after weeks and screaming from the market, and weeks saying thank you very much for lifestyle, but for God's sake, when on earth is Capital Select, and when's your buy products going to come over the line? I've got customers waiting. We eventually got our funders comfortable and got all of these 4 products over the line, and I'm very pleased we were to do so. The whole sales team, pride ourselves on being able to offer varied product range, to be able to talk to advisors about lots and lots of solutions. So it feels like we've got a new spring in our step, and delighted to be able to get these products over the line last week. So on Tuesday, May the 5th, we introduced remote valuations on all of these products. Please note, of course, that remote valuations were already in place for lifestyle, so differentiate between the two. Lifestyle over the range a month ago, and now remotes on these 4 products. Now, lifestyle, you'll notice that I never mentioned anything about retentions. That's because there are no retentions. We took a haircut on LTV, we adjusted the interest rate, and we got comfortable with the fact that we were doing low LTV lending, low risk lending. The thing about Capital Select in particular is that we've been able to go all the way up to our platinum range. So we're offering higher LTVs than some of the lenders, and therefore comes higher level of risk from a funding point of view, and therefore took a little bit longer to get it over the line. But we do have some products that will help your customers where maybe some other lenders aren't able to. So in terms of remote valuations on Capital Select and the Interest Select, and obviously both 55 and second homes, new KFI will be produced based on the current interest rates that are available at the time, but a retention of 10% subject to a minimum 5,000 will be applied to the loan amount, including the cash reserve facility if applicable. Temporary modifications on our lending criteria, as we've already discussed. Eventually, a satisfactory on-site valuation within 6 months of completion. Remember that 6 months is a hope to do. We may have to extend that to 7 or 8 or 9 months, just depending on where in the country it is and what happens with regards to the government direction to RICS, and then RICS direction to eServe. And then, of course, we've got our valuers finding sufficient information about the property. And this is an important point I'm going to come to in a minute. There is a new form of decline that we've not been used to in our sector. The lending criteria, we've been able to keep it exactly the same, because again, the tail is wagging the dog. eServe have told us what they're prepared to write. So nothing new on this slide, but just kept it in there to explain that the lending criteria is the same across the various product ranges. Been able to keep that the same. All right. So when is the retention applied? The retention is applied to the loan ultimately at outset. All right, and we're going to come over, I'm going to talk to you about a couple of case studies in a second about how that works. So how does a retention work? With us, if the customer has applied for an initial advance, and we'll say it's £100,000, we will issue £90,000 at outset, and retain the 10,000 until such time as a satisfactory valuation can be obtained actually out in the field on a physical basis. So the 10,000 will be retained so that should essential work or repairs need to be carried out, it can be done. Or if there's a down valuation in the property, it gives us a little bit of wriggle room there. So assuming that the valuation takes place, matches the desktop valuation, and of course, there are no essential repairs to be carried out, we will then say to Mr. Client, would you like the additional £10,000? It's a one-off offer, yes or no. Okay, and they will say yes or no at the time. We will not be charging any interest until such time as we get to that point. So 100 grand facility, they take the 90 out front. That needs to be enough to obviously deal with their immediate needs. And then there will be the option to take the additional 10,000 later on. If a customer has applied for an initial advance and the cash reserve facility is greater than the retention, so in this instance, they borrowed £50,000, they potentially could have, on the standard product, 50,000 on reserve. We're going to say, we're going to hold the entire reserve facility until such time as a physical valuation has taken place. And at that point, you'll either be offered your 50,000 reserve if it all goes to plan, or you'll be offered 40,000. And if the property has been downvalued, or if there's immediate works that need to be carried out, and at that point, they can potentially borrow the rest of the money. So if you're going to give advice to a client, then what you need to do is give them enough money to last the first 6 to 12 months, give us time to get a valuer out there, and off we go. Now, the KFI, the system that we have, isn't quite flexible enough to show this retention. It wasn't designed to have retentions on it. Never knew this situation was going to exist. The retention itself can't be shown in the KFI, but it will be detailed in full detail in section 17 of the offer letter. So you'll need to say on the £100,000 case, Mr. Client, here's a KFI for 100,000. Okay, we hope the valuation goes to plan. Okay, but what will happen is you'll be offered 90,000 on day one, with the other 10,000 subject to a correct survey and a successful survey as soon as we can get one done. The retention will be released if there are no immediate requirements to be carried out of the property, so no damp, no subsidence, nothing like that. Okay, and obviously the valuation itself is free of charge. The retention will be reduced or withheld where the on-site valuation identifies a need for essential repairs, or alternatively, it confirms that the valuation of the property has fallen since. Full details are available on our website. You hate us saying it, we hate saying it. The reality is we have a very, very good, decent, clear and easy to understand website, but most financial advisors, when I say, go to the website and look for up-to-date details, there's kind of always a tut or a rolling of the eyes. The reality is, if I was an advisor right now, had my license back again and was advising, I would be checking the lending criteria and the lending policy and the guide to temporary modifications with every single lender before I gave advice, because this is a moving feast. Sometimes you'll miss an email from a lender, that kind of thing. You might miss some important up-to-date information unless you're prepared to spend half your life on webinars like this every single day of the week. So do, before you go to any lender, just check their website for any up-to-date details and changes. Yes?
It's all on the AIR website on the COVID page, so that you can go to one site and get all the lenders' updates fed straight into that, and that's live, real time. So that's a one place to go instead of all the individual lender sites, if that helps.
Yeah, well, fantastic. So if you're not going to individual lenders, then there's no reason why you couldn't go to the hub and get it there. Obviously, that's a good facility to have, and like I say, if you can get it all in one place, fantastic. There might be some nuances that aren't necessarily in the hub, so some real detailed stuff. So, for example, Stuart, I don't know if you know if all these postcodes, the London postcodes, are on the hub. I don't know if they would be or not, but
the document will be the reference document, but it's on there.
Oh, fantastic! Right, so via the hub, via our website, a full list of London postcodes. I did say that earlier on in the presentation that those postcodes were listed on the website. So that's fantastic. Full details there on how we do retentions. In terms of pipeline cases, remote valuations can only be progressed on cases issued after or quoted after 10 a.m. on the 14th of April. If the KFI was generated prior to 10 a.m. on the 14th of April, those applications are subject to having an on-site valuation and an offer produced by the 15th of May. Well, of course, we're almost there at the 15th of May, so that seems a little bit harsh, but the reality is those deadlines were put in place 6 weeks ago, well before the second 3-week period and into now the third 3-week period. So they were just lines in the sand that the funders put in place, back in, I think it was March. So yeah, we had no idea that what it was going to look like, how long we'd be in lockdown and so on and so forth at that stage. Where the KFI was generated after 10 a.m. on the 14th of April, applications which do not meet the requirements for remote valuation will be placed on hold until we can get a valuation out there. So such incidences would be, like I said earlier, I've got 25 acres, can't do that on a desktop. We've got potentially a situation where the property's worth 3 million quid, can't do that on a desktop. So by all means quote, by all means apply. And the idea would be to keep them on hold until such times we can get a valuer out. There are various different views on when valuers might get out. Given that England is able to sort of travel now, Scotland, Wales, and Northern Ireland unable to. So it could be that the government guidance to RICS is that some valuers in certain areas may be able to get out and transact business. I don't know when, and I don't know which areas, but that could be something that happens. In terms of interest select, over 55 buy-to-let options and second home options. So not capital select, not lifestyle. These particular products were priced quite conservatively in terms of LTV to interest rate ratios and stuff. There was a little bit of room in there. So no matter when those cases were ultimately quoted and applied for, those rates and deals will be honoured, subject to us either being able to conduct a desktop valuation or alternatively a physical valuation. So we're reviewing those cases to see how many of those we can get over the line on desktops. In terms of the legal approach, I've been in this sector since '98. I never thought I'd see the council reduce the strictness of their conditions and their excellent standards regarding legal advice. And I know that it took them several weeks of consultation to get this over the line, but I do believe now that there are obviously solicitors who are able to work with the third way of working effectively and conduct customer interviews and appointments via Zoom and such forth. So we are able to accept those particular applications. So if the solicitor is unable to see the client, we are able to accept it, subject to there's some additional paperwork that gets filled in. One of the pieces of paperwork that we give the client is or ask the client via the solicitor system. So it'll ultimately come out through Eversheds and through the client solicitor, is that they must complete a form that suggests that the property is in good repair and is mortgageable, just asking them to actually confirm that in writing. So there are some additional safeguards in place. I think it's fantastic that the council and the legal professions have been able to work their way around the original standards that are in place. In terms of remote valuations, we use eServe. eServe have a sophisticated 20-point system that enables them to get comfortable with valuing properties. They use Rightmove Plus, they use land registry sales history, previous eServe inspections, satellite images, so that would be Google Earth, and they'll do that at Street View as well. And of course, building cost information service and a comparables tool. None of this is as good as sending a surveyor out. None of this is as good as going and speaking to local estate agents on top of these things. But that's why they've reduced their lending criteria, and that's what we're there are two. Is that not all instructions are suitable for remote valuation? So it's quite possible that valuation we could try and make that work. Our rates of top valuation on the basis of what you told me. Then it gets to eServe, and for whatever reason, maybe the property hasn't been sold, maybe other properties haven't been sold around it, we cannot obtain enough information about that property to substantiate a valuation. On that basis, there is a new form of decline. The new form of decline is, so instead of subsidence, not weed, blah, 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 the new form of decline is not enough information available to be able to substantiate a valuation. eServe are pushing that, and they are pushing it hard. Cases that come up with a zero in terms of information, it goes to another senior level, and they are trying to find ways to say yes. Trust me, eServe need the business. They want they need, like any other business, they need their customers, and they need to be out doing surveys in order to earn money. So absolutely, I can guarantee you that those cases are strictly reviewed, and wherever possible, we try to find a way to say yes. The second thing is that, and I've said this in every Zoom call I've had, I'm going to say it again, just in case you haven't heard me before. We as lenders had a responsibility and a need to get a varied product range to you, to find a way for you to be able to transact business, and to find a way for you to be able to help your clients. And I think as a sector across the board, one way or another, we've done a very, very good job in a very short period of time. And that I say for all lenders. But you, in return, have a responsibility to look after us. Now, I know it's difficult if you're not doing a home visit or a site visit, but you have a responsibility to yourself, to the sector, and to the lenders to make sure that every property you put through to us is suitable for lending as much as you can tell. Now, whether that's because you've visited the property previously, whether that's because you've got the client to do a quick zoom around their maybe some kind of video call around their house, whatever. If lenders are forced to repossess people in 6 months' time, 12 months' time, because there's a problem with those properties that was maybe fairly obvious or could have been seen one way or another. If it's an accident, okay, fair enough. But if it's a property that knowingly had clutter or potentially a subsidence or whatever that issue is, if that property ends up on our books and we end up maybe having to repossess an unhelpful customer, if that happens, that will go to the Daily Mail, wherever it needs to go, to create another black hole for our sector to fall in. We've done so well at repairing the damage of the products past and repairing the damage and getting people like Martin Lewis back on side to some degree. We don't really want to mess it up right now. So look after us. We're trying to look after you. It's the one message, my little soapbox message that I have been trying to communicate in every single Zoom call I have. In terms of process, pretty much I got told off by Alice for saying business as usual the other day. It's not really business as usual because we've had to work systems, or we have to work systems around our normal working processes. But what I can tell you is that service standards are holding up. And despite the fact that our staff are all working safely at home, we are able to receive applications. The underwriters do their triage. The valuation is instructed. If desktop
We've lost Les. Les, come back. If anyone can hear it, has got their video on. Turn the video off for a second. That might just unjam him. We've lost Les for a second.
lots and lots of information being thrown at you. Did I disappear?
Yeah, you disappeared there for a few seconds.
Oh, okay, right. Well, I was just saying, I'll go back a slide just to say that we have a coronavirus support hub as suggested earlier, but also obviously the club have theirs, Air have theirs, and then finally, please make a note, take a picture of this screen if you can with your phone or whatever. We have ultimately about 6 people answering the phones that might have been answered by about 26 people. Okay, we've got phones forwarded to phones at home. It goes around a hunt group. It's people's mobile phones. It's the best we can. You might find that at busy times we are unable to answer the phone and it goes to answering machine. Take a note of these email addresses. Please use them, and it will enable us to better handle your inquiry. So if it's regarding the applications team, if it's something you need to talk to them about, there's the applications team email address. If it's underwriting, you want to check out property details, stuff like that, by all means, go direct to our underwriters. We've always given you direct access to our underwriters. And of course, we've got our wonderful sales team dotted all around the country and specifically up in Glasgow, who are happy to answer your calls. That's their telephone number. By all means, give it a shot. If for whatever reason we can't answer it because we're just so busy, then send an email to hf-sales. Even I'm copied on that one. But yeah, get those emails into us wherever you can, and we'll do our very, very best to answer your inquiries quickly. And that basically is it regarding Canada Life and our update. Is there any questions from those people on this call?
Les, I've got a couple that have been pre-sent in, so I know we're slightly overrun, but I think everybody will be happy to carry this on just for another few minutes because it's been a really good update. A couple of questions, and one from Tim. Criteria, I don't know if you covered this, but clearly you detailed the black and white nature of the criteria on desktop applications.
Mm-hmm.
On applications that aren't going to desktop valuation, is the criteria as was, or is now everything irrelevant of its root underwritten on the same basis?
Yeah, it's pretty much as it was, but of course it won't go anywhere.
Yeah,
that's the trouble. So we'll still take the 25-acre properties. We'll still take those with, grade 2 listed and all that stuff. So, but it's just subject to getting a physical valuation out there. And all any business can tell you at this time is that is correct as of today.
Yeah.
None of us, doesn't matter whether you're trying to talk to Ryanair. Good God, let's hope you're not having to, like I've had to over the last month. But doesn't matter whether you're speaking to Ryanair or whether it's a holiday firm or whether it's any other form of business, a hotel chain, whatever it is you're trying to do. They can only tell you that as of today, this is our stance, and as of today, this is our stance.
Absolutely. A couple of other questions. One from Tracy at Responsible Life, and one from Nick at Evolve Lifetime. Nick's first, any estimates on how long you think new build physical valuations can begin? And then the second question, which I'll let you have, and then you can answer both in succession. What is Canada Life's view on post-lockdown interest rates and LTVs? It's where you need your crystal ball to a degree, but you've probably got a little view on that. So there's a couple of questions for you.
Okay, so right. So first of all, in terms of rates, supply and demand will always dictate where rates go, right? So for that, you'd need to understand where demand is going to go. Demand for equity release off the back of this has to be higher than it was before, because it helps so many people out. Gifting to kids, plumbing firms that can't operate, people that have got small businesses and so on are going to need a lot of support. We've just learned in the last hour that the government will extend furlough, but for how long, and that businesses might have to pick up some of the bill after July. I think it's very, very difficult to say what might happen with rates. And this is what I've said to advisors, where it's very, very difficult to give advice, because for a month they had very few products to be able to advise on. But the problem was, if they didn't advise on one of those products, they didn't know whether what was going to come would be better or worse. Very, very sticky wicket to be on. My personal view is that, and this is a personal view, it's not something that, this isn't Canada Life view. I don't see huge changes in rates, but of course there will be tweaks. And that will depend on funder appetite. And funder appetite will depend on the risk. And the risk will depend on how long this thing goes on for and what ultimately happens and what the government does. All of these are unknown. The government don't seem to know. So I can't see anybody else, knowing what's going to happen. The one thing that is clear from the paper yesterday, the consultancy paper that went into the government by Sage, was that there isn't going to be a cure for this. We've just got to find a way of working with it. So what does that mean? And that's, I think, why there is all that confusion out there. None of us know how we as businesses will continue to transact business on a non-face-to-face basis. How many advisors, £1 for every financial advisor that said to me, you cannot do equity release advice over the phone. And then I'll do an equity release advice over the phone. Yeah. So, that was that. And what was the other question, Stuart?
New builds, any indication? Obviously, at the moment they're a no-no, but new builds, any light at the horizon with that?
Not that I know of. I mean, we're in eServe's hands. What I can tell you about eServe, and I can't comment for other firms, is that they are looking for ways to say yes. I said it during the presentation. If they can look to extend the current kind of property price limits, they will look to do so. If they can find a way of getting comfortable with new builds, I'm sure they will. They want to say yes as many times as possible. Think about it, it's cash flow. If nothing else, it's cash flow. Because if properties aren't desktopable, okay, we won't be paying them their money. And the sooner they get valuers out seeing customers, the sooner you can open the floodgates. There are something like 60,000, I believe, maybe 70,000 outstanding field visited physical valuations that are currently stockpiled. So they'll certainly be busy when the floodgates open.
Definitely. Thanks, Les. Okay, I'm conscious of time, but any last minute questions from anybody on the call at the moment? Andy?
Yeah, quick one then, Les. The changes to criteria, some of which compared to the old criteria are quite punitive, if you like. What will it take for you to revert to the old criteria?
Physical valuations.
Okay, but when you start physical valuations, will it be an almost instant, right, we're back on the old rules? Or will it only be, like Stuart suggested, you suggested, there might be regional return to normal, if you like, and across the UK?
Well, there's two things. There's our own lending policy. So we're allowing financial advisors to quote a £3 million property on a £600,000 loan right now. So we're allowing those to go through. So the hope is that normality will return when surveyors are able to go out and can transact their business in a normal way. When I say about regional things, it won't be us dictating which regions go out. It will be the government telling RICS doing their own research and telling eServe, and not just eServe, but countrywide as well. And then they will have to get comfortable with it themselves. But we have a moral dilemma here. We'd all like valuations to take place. We'd all like physical valuations to take place. But right now, there isn't enough PPE protection gear in the country to service the NHS fully and properly. And that's what we're being told. So if you've got 100 surveyors seeing 5 properties a day, that's 500 bits of PPE gear that the NHS haven't got. And there's a damn sight more than 100. And of course, you can time that up by a week, by 2 weeks, by 3 weeks, by 4 weeks. And the question I guess we have to ask ourselves is, should that PPE gear be available to nurses and frontline staff who are putting themselves in harm's way, or a bunch of surveyors? And I think maybe, I don't know, but if I was to add some common sense to this, maybe that's one of the reasons why the government haven't wanted surveyors going out, because ultimately that PPE gear, I think, would have to be taken off and put back on, and it would have to be taken off and maybe disposed of at each property. So they go through a lot of it, potentially. I don't know. Again, it's a personal view and just add in an ounce of common sense to it.
Cool. Thanks, Les. Okay, I think that's probably about it. Les, thank you very much. Standard sort of health wealth warning at the end of these events is the information is only correct right now and subject to change, but font of all knowledge is the airsourcing.co.uk COVID-19 information hub, so please use that as a source of reference. Contact your Canada Life team if you've got any subsequent clarification queries. And remember that if you've got cases that are locked that you can't progress underwriting inquiries, then please again feel free to use the online chat, and the team will utilize the place and replace service and try and find you lenders that can progress things. But Canada Life, great to see you back solidly with a good range of products. And Les, thank you very much. That brings us to an end of today's session. Goodbye.